Well, we're here again with Mark Collinsworth of the Vere Global Asset Management Corporation. And Mark, a review of Wall Street this week. The market's closed down today, and I guess it's because the coronavirus spread is still having an impact.
Correct. It's actually two parts. One part, there was actually a fairly large increase in the coronavirus in South Korea. I don't think the coronavirus is really the main issue. If you look at the Asian markets were only down about 0.3% in overnight trading. I think the big news of today was it was the coronavirus plus some economic data that came out that showed a very sharp decrease in economic activity, which I think has really pushed the markets down.
So generally, a slowdown in the economy in addition to coronavirus.
Correct. It was kind of a double punch.
Now, they're also saying, though, that coronavirus spread and the persistence of it so far is leading to some interruptions in the supply chain, or at least it's anticipated that that'll happen, and that will have an impact.
Correct. It's already starting. CEOs here in the United States are already starting to issue earnings warnings. McDonald's, Coca-Cola, they've all come out and actually said there will be a significant impact to the coronavirus from Chinese profits over the next quarter.
And I guess tech stocks were the hardest hit this week.
Tech stocks were the hardest. They were down anywhere between 1.5% to 2% on the day. Of course, a lot of that could just be that those have been the best performing stocks year to date. So if you're going to take profits, you're going to take profits in the ones that are up 30 and 40% on the year.
Now, how much did the market close down?
The market closed down today. The S&P closed down 1%, and the NASDAQ, which is mostly tech stocks, closed down 1.79.
And isn't that one of the worst performances since a few months ago?
That's probably the worst performance since probably September of last year.
Uh-huh. So, I mean, what do we have to look forward to? Is it going to continue to have the impact between the general global slowdown and coronavirus? Or what's going to happen next week, next month?
Well, believe it or not, Larry, February actually, here in the last 10 years, has actually been the worst performing month of the year for the stock market. So with the market selling off, it's not a big surprise. I think the coronavirus and the slowdown in the economy is just reasons for traders to take profits. Historically, like I said, February is a down month, but going forward, I don't think there's going to be a big issue. If you look at the number of people that's just come out with just the normal flu this year, there's 26 million cases of the normal flu in the United States. The coronavirus only has about 76,000 or so, the Chinese say.
But yet, we still don't know the end result here. I mean, we don't know how virulent it is. We don't know how much further it's going to spread, and we don't know how well efforts to contain it is going to be. So it's really pretty much a wild card at this point, is it not?
Correct. It's an unknown variable, but I don't think there'll be any significant impacts. Like I said, the normal flu that everyone's gotten this year, 26 million people, that has not caused a major impact to the economy. So I really don't expect the coronavirus to have a major impact to the economy long term.
So for investors who are wondering where to put their money now or what to take their money from, if there's any kind of business related or stock related to China, what's your advice?
Stocks that are related to China, that are actually Chinese-based companies or companies that do a lot of business in China, I would start putting together a wish list, and here over the next 3 to 4 weeks, look at putting some money to work in those. Don't put everything to work at once. Also, just looking at, growth stocks. Growth stocks have had a huge run up over the last several years, like, your Microsofts, your Amazon, your Facebooks, but a lot of stocks like, your Caterpillars, your John Deeres, the more industrialized, the Rust Belt stocks, as they say, really haven't done very well. So there should be a time where the pendulum swings back and those value stocks, the old Warren Buffett, Benjamin Graham style of stock picking, should come back into favor. So you may want to look at those. And the easiest way to look at those are those stocks historically pay dividends. So be a dividend hunter here over the next several weeks if you want to play the value rebound.
All right, Mark. Now we're talking on a Friday evening, a few hours after the markets close. What can we expect for the opening next week of the markets?
You'll probably see a little bit of a downslide on Monday, but I think things should stabilize on Tuesday or Wednesday. We're getting into market cycles. Historically, the last 3 days of a month are historically positive. So once we get the sell off on Monday or Tuesday, I think you'll see the remainder of the week on the positive side. And then we'll have unemployment numbers coming out next week. That'll give us a little bit better idea to what the coronavirus is actually doing to employment here in the United States.
All right, Mark Collinsworth, the asset manager of Vere Global. Thanks for joining us.
So thank you, Larry.